First, it was Terra Luna. Now it's currently Celsius fighting to keep its head above water. The overextended, over-speculative house of cards crypto companies are starting to fall. If Celsius is next, who will be the next domino to take their plunge? And will that domino obliterate the crypto markets? We'll find out in about 10 minutes because it's time for Chico Crypto. Everyone should know about Celsius as of now. It's the talk of the town. So what's the basic breakdown of this Celsius fiasco? Well, Celsius is facing a liquidity crisis, one in which the spiraling down market prices make it harder and harder for them to match their liabilities, aka customer deposits, with the assets they hold. Now, there is an estimated $10 billion worth of liabilities, aka those customer deposits on Celsius. And according to research of Celsius wallets, there is only just over $1.4 billion held by Celsius in their on-chain wallets. That is a big discrepancy, and with the news of insolvency coming out, the platform would go under as customers flee from the platform. That is why they halted all withdrawals. So where is the customer's money? Well, like dominoes falling, Terra Luna's collapse is contributing to Celsius's problems. According to Nansen, an on-chain research company, in their article On-Chain Forensics, Demystifying Terra USDT Peg, Celsius was one of the 7 whale wallets who contributed to the depeg of UST. They had up to $500 million in customer funds, playing around with UST, Luna, and Anchor. They were able to get some out during the collapse, but not all of it. So what else is there? There's about 400 million of customers' Ether staked on the Ethereum Beacon chain, which can't be withdrawn until 6 to 12 months after the merge. They've been taking customers' ETH and staking it with Lido to receive ST ETH, which they've been earning higher yields with, which worked out in a bull market, but not in a bear. Celsius counts on ST ETH holding its ratio at 1-to-1 because it needs to match liabilities. But with a liquidity crisis and bear market, the ST-ETH ratio has begun to slide, and liquidity is running out fast. And then there is this, the WBTC vault on the MakerDAO protocol. They've been turning customers' Bitcoin deposited into wrapped Bitcoin and using Maker to get DAI loans. 2 days ago, Celsius had nearly 18K wrapped Bitcoin leveraged in Maker. Their position faced liquidation at $22,584 per Bitcoin. There was a $278 million DAI debt, making it the largest individual debt position on the protocol. Well, they keep topping off this and fighting the liquidation. As we can see, as of yesterday, they added basically 7,000 more WBTC as collateral, which brought down the liquidation price to just over $15,000 per Bitcoin. These positions Celsius are in are often hunted by institutional trading desks and firms, and they will actively try to push down prices to get these positions liquidated, then make money on the trade when the forced liquidation goes through. So who's the culprit? Well, according to Ethereum World News, it's SBF, Sam Bankman-Fried's Alameda Research. They have an article titled, Alameda Research's recent alleged STS sell-off put Celsius Network in trouble. And the article states, Alameda Research recently redeemed 50,000 ST ETH for ETH, and the worries are this will affect the ST ETH peg. They are messing with ST ETH and the ETH peg, drying up the liquidity and forcing Celsius's hand. And many people theorize they are also trying to liquidate their WBTC maker position by actively shorting and dumping Bitcoin. So Terra Luna goes down, which is the domino that begins the Celsius fall. Like I mentioned in the beginning, who could be next? Celsius' demise would be the push to begin the fall of who? What about Tether USDT? So if you didn't know, Tether is an investor in Celsius. From Celsius's own filings, we can see Tether is in position 2 and 3 as a top shareholder. Besides Celsius themselves, they are heavy into Celsius. So, the Tether reserves. What is backing USDT? Well, Tether put out an attestation just last month. Not a full audit, but just an attestation. As we can see from the document, they had just over $4 billion in cash on hand. But then if you look below, they had over $3.1 billion in secured loans and over $5 billion in other investments, aka digital tokens. Tether had more loan and digital tokens on their balance sheet than cash on hand for redemptions. And as we know, redemptions have been going wild lately once the Luna fiasco began. 11 billion redeemed from May 10th to May 27th. And just yesterday, another billion was redeemed. Well, the question is, can Tether survive more redemptions? Well, Tether obviously has a share of Celsius tokens. They are the second largest shareholder. So part of that $5 billion investment in digital tokens is Celsius. But what about in loans? Well, in October of last year, Bloomberg put out this article. Anyone seen Tether's billions? And the article states, after I returned to the US, I obtained a document showing a detailed account of Tether Holdings reserves. It said they include billions of dollars of short-term loans to large Chinese companies, something money market funds avoid. I also learned that Tether had made loans worth billions of dollars to other crypto companies, with Bitcoin as collateral. One of them is Celsius Network Ltd, a giant quasi-bank for cryptocurrency investors. So Tether needs Celsius to survive, or mass redemptions that they may not be able to meet would come flowing in, as some of the collateral backing their reserves is from Celsius themselves. Now, I'm sure you saw what happened to Celsius's token yesterday, a big old pump and dumper. Celsius went from about 33 cents to a peak of $1.42 before crashing right back down. What the hell happened and who was behind it? Well, a kingfisher on Twitter broke it down. They said, at SBF FTX, the risk engine messed up badly. UX was down. Most traders unable to hedge, close, or reduce their positions. The risk engine blocking traders. A BitMEX style. People deserve refund. That's not how exchanges are supposed to protect their customers. Spot market went above $2 to break index and trigger liquidations on purpose. That's a spot manipulation to liquidate traders. FTX, SBF, and most likely Alameda. Now, why would they be pulling off this manipulation, this hunting to take Celsius down if FTX is part of the Tether cartel? Well, they may be trying to break free and take the crypto markets for themselves. January of 2021, SBF replied to a thread from Dan Held, which dove into the Tether FUD and why he thinks it's overblown. SBF said this, USDT, very liquid on exchanges, moderately liquid for creations and redemptions, messy and imperfect but works. Claims that it's below 95% backed are totally unfounded, not to say it's only 95%. If there were issues with USDT, USDC, it would be bad, but crypto would survive. Now, for one, he says Tether is only moderately liquid for redemptions, meaning that if a cascade of redemptions came in, they wouldn't be able to fulfill all of them. But then he says, if there were issues with USDT, USDC, it would be bad, but crypto would survive. Now, this thread was fully about Tether USDT. Why would he bring USDC up? Well, because he was getting deeply involved with USDC. Last year, May of 2021, Circle, the company behind USDC, announced they were extending their partnership with FTX to go global. And then just a few weeks after this, Circle announced they raised $440 million. And from the list of investors, one of them was none other than FTX. So Celsius is being hunted by FTX and Alameda. Tether does not need Celsius to go under, or it could cause mass redemptions. FTX is invested in Tether's competitor, USDC. Is FTX looking to take down USDT to make room for their takeover? Now, some of you would say, why would FTX do this? Don't they have the same banking partner as Tether, Deltec in the Bahamas? You wouldn't be incorrect. They do bank with Deltek, but they have been moving away from this lately and increasingly going with an American counterpart, Silvergate. From this Bitcoin Magazine article, Silvergate Bank saw over $14 billion in Bitcoin crypto deposited in Q1 2022. They say, SCN, Silvergate Exchange Network, enables real-time US dollar and euro settlement between counterparties, in addition to faster trading, automated funds distribution, and data analysis. Its clients include FTX, Coinbase, Bitstamp, Kraken, and the company behind the USDC stablecoin, Circle. Is all I have to say. Cheers, viewers. I'll see you next time.